Hello and welcome to 3.0 TV. I'm your host Vishakha Thakur. Bitcoin prices have witnessed a rollercoaster ride in recent times. Often, the daily price swing would be as high as 6 to 7%, or anything between $2,000 to $4,000, depending on the severity of factors influencing investor participation. One key factor driving market has been the expectation of spot Bitcoin exchange-traded funds approval from the US SEC. Against that backdrop, a news of code generation by leading news agency or exchanges preparing listing process would end up adding fuel to fire. Several analysts have pegged Bitcoin price scaling above $50,000 mark. Some have gone even farther in their assumptions based on fund inflow prospect, calling for surge in prices to as high as $100,000 level. Well, Standard Chartered sees Bitcoin hitting $200,000 by year end. There's one outlier among them who sees a drop in price irrespective of SEC approves or rejects ETF applications. A recent report by Matrix Board's head of research and strategy and 10x Research's founder Marcus Thielen suggested betting against consensus. The Singapore-based research firm expects Bitcoin prices to fall in either case, SEC approving ETF's proposals or rejecting all. Thielen expects Bitcoin prices to rise initially once the ETFs are approved, but could still trigger a sell-off due to massive long position unwinding and profit-taking simultaneously. Also, he expects ETF-linked fund inflow to lag expectations. Holding long positions or leveraged bullish bets in the perpetual futures market tied to Bitcoin became more expensive as Bitcoin topped $45,000 mark. Thielen advised clients to book profit as the recent analysis indicated that the rally running out of steam. Following the Matrix Board report, Bitcoin fell 10%, while futures open interest declined by $1.2 billion. The funding rate dropped from 60% to just 4%, and volumes doubled from $68 billion to $116 billion for the crypto market. Well, it is essential to note here that perpetual long positions start to crumble under the weight of high funding rates and as the market stops moving higher. Consequently, markets experience unwinding of bullish bets and price pullback. One factor that led the rally in Bitcoin in the late 2023, according to Thielen, was the constant minting of tethers, which indicated $9 billion of fiat being moved into crypto. Well, those flows, which fundamentally tend to support higher Bitcoin prices, have paused since early December, leaving the upside in the hands of over-leveraged futures traders. The next key element for Bitcoin are halving in April, which coincides with the US election and prior to that, ETF's approval. Well, Thielen expects an immediate rally during the first few days of the halving year, followed by a fake out and a decline into mid-March. He continues to hold his view of the SEC sticking to its previous decision to reject spot Bitcoin ETFs, since the regulator is still concerned about fraud and wash trading in the underlying Bitcoin markets. An important aspect of this puzzle is that in 2017, when Bitcoin futures were approved under the CFTC's regulatory framework, both the CFTC and SEC were chaired by Republican-nominated more liberal personnel. And today, the three Democratic-appointed commissioners hold majority voting power. Meanwhile, more than a dozen ETF applicants are leaving no stone unturned to ensure the ETF's launch. The sun is set to rise on the BTC horizon, but much of this will depend on the SEC giving its go-ahead. Well, that's all in this special update. Keep watching 3.0 TV and do log on to our website www.3versetv.io for more such updates or scan the QR code. This is me, Vishakha Thakur, signing off.